SMB Investor with Nick Bryant and Sean Smith.
Hey everyone, you got Sean Smith here, managing partner of Search Fund Ventures and co-founder of SMB Investor Network. Today I'm joined by Andy Allaway of Empire Flippers. He's the CEO. He's got great experience with small business acquisitions and micro SaaS deals and all different types of transactions on the platform. So we're going to learn more from Andy about how Empire Flippers helps connect buyers with sellers.
Hey, Sean. Good to be here.
So why don't we kick off by starting with an overview of your background, Andy, and kind of high level on the origin story of Empire Flippers.
Yeah, cool. So, I joined Empire Flippers a couple of years after it started. So we have two US founders, and they founded the business kind of, in kind of early 2013, 2014, something like that. And basically, the origin story was basically they were making small content sites at the time, monetizing them with AdSense. And at the time, there was only really one place that you could sell sites like that, which was flipper.com. But it was kind of a bit of a wild west, lots of copying of sites on there and stuff like that. And so our founders started basically, they kind of did the build in public thing. So they had an audience while they were building out these small sites. And they basically just started selling the sites on their own site rather than kind of listing them elsewhere. And the origin of Empire Flippers is basically other people were like, oh, that kind of seems to be working for you. Could you list my site as well, basically, rather than putting it on Flipper? And that's what kind of what spiraled into what is now Empire Flippers, basically.
That's very neat. So kind of the dog food approach and, very similar to how we've been building in many ways. And, from there, I think you've got, a pretty substantial newsletter and just a really big network that you guys have built. Any metrics you can share on how things have grown since 2013?
Yeah, well, I mean, we've done, I should have had the stats to hand, but I'll look it up while we're on the call. But, we've now sold, 2,500 listings. We've got a buyer and seller network of about 325,000. Our total buyer, because we have buyers verify their liquidity when they come on our marketplace. The total of that liquidity is like over 13 billion now.
Wow.
And so, yeah, it scales to a reasonable size.
Yeah, that's great. And, verifying liquidity ahead of time, it's something that gets talked about a lot in kind of the small business acquisition world, and especially with kind of newer first time buyers. So the recommendation is have all your assets and all your kind of account statements in order. So when you go talk to a broker or when you go to anyone selling a business, you can put that down on the table and show them that you're a qualified buyer. So the fact that you guys do that up front, that's a major value proposition, I imagine, to your sellers as well.
It is for sure. And, the businesses that we list these days, they're not quite as easily copyable as those small content sites like back in the early days. But for sure, if you're a seller and you're coming to market, like one of the thing, of course, is you're kind of nervous about, well, who's going to have access to all of my information? And so, yeah, we operate, we call it our unlock process, but, we have a redacted public listing page. And then to view the confidential, kind of the SIM details of the business, then you have to kind of verify your ID and verify your liquidity with us as well.
Sure. Very good. So what are the kind of typical deals that you guys list? Is there an industry segment that you specialize in, or is it pretty broad?
Yeah, well, the main thing is we specialize in online businesses, right? So 99% of what we will find on our marketplace are businesses that can basically be operated from anywhere. Yeah, we do a lot of e-commerce. So we do a lot of like D2C, Shopify style e-commerce. And then, the various Amazon business models are a big part of our marketplace as well. We do a lot of FBA, KDP, publishing, merch, stuff like that. And then we do SaaS services, agencies, and things like that too.
And who are the typical, buyers of those businesses? As you and I have discussed, kind of, we've historically been more in the search fund world where folks are looking for the plumbing companies and, the local kind of businesses that, have those kind of local economy of scales dynamics. But, there's a whole bunch of folks out there that are buying internet businesses, and we've spoken to a handful of them as well. So who are kind of the typical archetype, I guess, of people on Empire Flippers?
Yeah, I think there's a few buckets that they fall into. So probably helpful to mention that, in terms of like list price on our marketplace, We'll have anything from, around about 100K list price up to like mid seven figures is where like 80% of our listings sit. We'll occasionally have a few smaller than that, and we'll do some eight-figure stuff as well. But that's kind of our sweet spot. And the buyer kind of varies across that range a little bit. So, on like the lower end of our marketplace, it's kind of like owner operator type buyers, maybe like first steps into buying a business, basically, have had a good career that maybe they want to supplement or do something different, something like that. And then, up on, particularly as you get up in kind of list price, and you start to see kind of some of the more institutional type buyers, whether it's like portfolio companies that are rolling up a few businesses, or yeah, like small PE family office buyers, that type of stuff.
Very interesting. And do you find that, maybe you don't have this level of detail in front of you right now, but do you find that many of your buyers, in the search fund world, a lot of folks, self-funded search especially, use the SBA 7A loan program in the US to acquire businesses?
Mm.
Do you find that a lot of folks are doing that with the businesses on Empire Flippers, or is that less common?
I mean, it's definitely grown as a portion of our business. And I think, first of all, I think like lenders over the last few years have become a bit more familiar with like online businesses and
Sure.
where there may or may not be certain types of assets, stuff like that. So yeah, I mean, we pretty regularly are doing deals now that are funded via SBA or sometimes like other bank financing too.
Got it. So yeah, it sounds like the dynamics are in general pretty similar to, a lot of the deals we do, just kind of in a more internet focused, online focused world. So that's great to understand. So I guess just kind of flipping things a bit, you've seen 2,500 deals. What are some kind of frequent either challenges or obstacles that you see? And maybe some of these are unique to online businesses that you may not run into in kind of other segments of the market.
Sure. Yeah. I mean, I think a big one is, when a buyer is reviewing any business, but certainly an online business, like the number one question they're asking themselves is like, what happens when I take the seller out of this business, right? And so we see this a lot with, agencies are typically a good example of this. You get a lot of agencies which are great businesses, like they make a load of money, but they're kind of an extension of the seller's skill set, and the seller is doing like 50 hours in the business. And so I think, that's where kind of building deliberately with an exit in mind, at least when you're 1, 2, 3 years out, can be really beneficial, because then you can kind of put things in place, whether it's team or processes. But yeah, I think that's a big one. Yeah, I think a lot of these businesses, if they're not built deliberately, can have quite high owner involvement.
Yeah, that's such a key piece of kind of the transition and just valuing a business in general. And it's kind of it's an intangible. Whenever people talk about valuation, a lot of times it's, your traditional methodologies, your relative kind of comps, all that stuff, and the quality of revenue. But it's easy to overlook the fact that, if the value of the business is in fact the owner and kind of the extension of their network, and, both on the, whether it's subcontractors or, customer side, it's really hard to sell that business. So that's key.
Yeah. Yeah, 100%. And I think like in those instances, one of two things is going to happen. Like you say, either it's just hard to sell because buyers see that as such a huge risk, or at a minimum, they're going to price in replacing you, right? So if you're kind of like running the business and, kind of like paying yourself via distributions, and just for easy maths, your business is making 120K a year, but the buyer says, okay, I like the business, but it's going to cost me 100K a year to replace you, then like you're going to be getting a valuation based on kind of like what's left after that, which is obviously a big difference.
Yeah, absolutely. That's very interesting. Um, in the world, in a lot of the deals we do, there's kind of three common themes we see. There's that key person risk, and we often look for that up and down the org chart. So, the first question is, like you just said, is the value truly transferable? But then kind of a secondary question is there anyone else in the organization that might be kind of a, obstacle, or holds a lot of the kind of know-how or relationships, and do we need to kind of diversify away from that? So I imagine in a lot of cases that may exist to some degree in the larger deals you do. um, but the other one that would be interesting to explore a little more is, in internet businesses and, um, software more generally, a lot of times folks may focus on things like the code base and the IP and who actually owns a lot of that stuff. So does that come up frequently, or is that kind of less of an item?
I mean, it comes up, on SaaS deals for sure, like the code base and code inspection will typically form part of due diligence. I think where it comes up on other deals like e-commerce and stuff is like basically what protection do you have over the brand
Yeah.
is kind of the similar thing. Do you have various trademarks, copyrights? Amazon specifically has this concept of brand registry, which is really important. Yeah, I mean, whatever the business, some variation of like what's the IP and how protectable is it definitely does come up.
And that's going to be a bit unique too. I think some of the deals that people find on Empire Flippers, because when folks are looking at the local plumbing company or something similar, sure, the brand and the reputation are important, but in many ways it's a more commoditized service. It's not kind of if you're running a newsletter or a content site, the brand is what you're buying in many ways, right?
Yeah, absolutely. I would say the brand and kind of the assets of the business as well is why, like, the businesses that, particularly at the moment, that command like highest multiples tend to have things like diversification of traffic and owned media assets, whether it's email lists or social followings, and that all kind of plays into brand. But yeah, they're the different kind of breakout
That's a
bits.
great point. So I'd love to hear from you, some stories of maybe some of the most exciting deals you guys have closed, or any kind of, horror stories you've seen through the platform.
Yeah. Well, I guess like, exciting deals. We do a good volume of like mid seven figure transactions through our platform. And one which is kind of fresh in the mind at the moment, we closed I think it was like $4 or $5 million deal, something like that, at the start of this year. It was an e-commerce business, but actually the thing which makes it stand out and is so cool is we have a referral program, right? So if people refer listings to us or buyers to us, and they sell or buy a business through us, then we'll pay a portion of our fees to basically the person who referred them. This deal had a buyer and a seller referral partner, and it was a decent sized deal. So we paid each of those, I think, like just under $80,000 each as a referral payment. And the cool thing is that the seller referral partner, it's a guy who like makes, kind of make money online content on YouTube, and just basically had his referral link in the description of his YouTube videos. So someone clicked his link, and that click was worth kind of like $78,000 or something like that, which is pretty cool. In terms of like war stories or things that go wrong, it's never anything that extreme. It's always variations on the same thing, which is like something comes up in due diligence, normally, which just kind of like breaks the trust one way or another, right? It's often less that it's not like an overcomable issue. And this is why, like, whenever I talk to sellers about exiting, I always say, like, just due diligence is the time to be upfront, warts and all, and kind of like instinctively, sellers sometimes feel that they have to maybe like cover up mistakes they've made or things that have gone wrong in their time running the business. And that intuition is like completely the wrong way around. Like that's the time to be like super upfront about, hey, I spent money on this and it didn't work, or like I made this mistake, because really what buyers are trying to do through that process is build trust. Like, is this a guy I can trust? And those can be some huge trust building moments. So, yeah, I mean, normally the horror stories, as far as we're concerned, are normally just like something that breaks down in the trust or communication, normally in due diligence.
That's a great point. And I think, there's been a lot of folks that have written or talked about this online, but, you know, working with a good seller can make a big difference both during the transaction and post close. And there's been, I think a common sentiment is people create transition agreements, consulting agreements, and we've heard of lots of those where people put together a 12-month transition agreement and they end up parting ways with the seller after 30 days, right? And in some cases, it's more, I would say, congenial, and in other cases, it's a little more hostile, right? So being able to identify that, to your point, and build that trust during the transaction, and determine that, hey, this is someone, if I need to, after the transaction closes, I can get some support from and I can trust. It's a huge, huge thing.
Yeah, 100%. And I think, it's natural as a buyer to come into this process and think, well, this seller is just trying to like get the money and run, and I have to make sure they're not, kind of pulling a fast one on me. And of course, that is a little bit about what due diligence is about. But the vast majority of our sellers, I mean, like this business that they've worked on is like it's their baby, and it's actually like super important that it goes into a good pair of hands post sale. And so, yeah, I mean that makes complete sense. And I think most when you get a good like buyer seller match, I mean, like it's perfect because the opposite happens. It almost doesn't matter what the agreement says. The seller will go above and beyond to make it successful for the buyer because it's important to them too.
How much, just out of curiosity, do you guys track kind of where deals go post close, 12, 24 months, 5 years out after you've sold a business or worked with a buyer?
I mean, we try to because obviously when they go well, it's like grade A testimonial
Yeah.
stuff. Like it doesn't get much better than that. I mean, it's difficult, I think like it's kind of ad hoc when we will have buyers who want to kind of talk to us and come back 2 years later and tell us about it. So yeah, I mean, there are plenty that do well. There are obviously some that don't. Sometimes we see how they go and how they don't because if there's like a seller finance portion or an earn out, we typically stay involved through that. So we get a little bit of an insight into it through that. So yeah, I mean, I don't know in terms of like percentages. I do know that anecdotally, like normally the ones that don't work out is typically because the buyer has like bitten off a bit more than they can chew. Like they bought a business that they don't have the skill set to run. And like some of the businesses we sell, like a generalist can run them pretty comfortably, but others of them do have quite specialist skills. And if you have an e-commerce business where the seller is doing like a lot of the paid acquisition, whether it's meta ads or something like that, and you're a buyer of that business, then like you need a plan for that if you're not also a paid traffic specialist, right?
Yeah. No, that's spot on. I think we see, in kind of as a parallel to a lot of the industries we look at, when people send us manufacturing deals, for example, if it's a precision manufacturer or even like a niche kind of manufacturer of a specific product, we typically want to see that they've had pretty, robust experience in and around manufacturing. They understand capital budgeting, they
Mm-hmm.
understand inventory management, layouts of shop floors, things that just don't exist if you buy, for example, a janitorial company where the core capabilities are people management and kind of scaling with labor, things like that. So it's a very similar
Yeah.
concept, I'd say.
Yeah, that makes complete sense. And, it's tough because on the one hand, it's not necessarily our place as the broker to judge whether or not the buyer does or doesn't have the skill set. But we will try and like, if it's really egregious, I can think of an example from sometime last year when like I took a call with a lady and she was looking at an iOS app that we have or a suite of apps, I can't remember exactly, that we had listed. And it was just like, clear that it was a terrible fit for her. She was kind of like, oh, there's something on the listing page about this thing Swift, which is like the programming language for iOS. And I was like, this is just we're not going to sell you this
Yeah.
business because it's like 99% not going to go very well.
Yeah. Yeah. You got to understand how the app is made to some degree.
Right, exactly.
Very good. Well, any closing remarks you have for us, Andy?
Yeah, I mean, I think I would just say that, I know probably that the audience of this podcast typically is looking at more traditional brick and mortar type deals. But if like what we do in the online world is kind of of interest, then we have a pretty big team who are very happy to do like exploratory calls and, just kind of even if you're quite early in the journey of looking at online businesses, we'd love to chat and kind of tell you a bit about what we do basically. So yeah, feel very free to reach out.
Yeah, I think it would be great for folks to kind of expand their aperture, especially if there's sort of a bent towards the brick and mortar type businesses. There's a lot of real opportunity on Empire Flippers. So very cool. Appreciate you taking the time.
Pleasure, Sean. Nice
I
one.
know.